and all the EFT payments. Answer is 6260. It means there is no error. There is no error plus there is no fraud. Otherwise, this is a case of fraud or maybe human error. So again, so what is missing in our bank statement, we add over there. What is missing on the cash book side, we add or less over there, right? So we have a formula as well. So you can also, see that one. So how we can tally that one. So first of all, bank balance plus deposit in transit minus outstanding checks. The errors can be negative or can be positive, right? If bank mistakenly increase your revenue, somebody else, client send money to this account, but bank wrongly credited to your account, then you decrease that. So errors are quite flexible. You need to see that whether we should less it or whether we should add it. So you see the nature, whether we should decrease it or whether we should increase it. So in this case, bank wrongly decreased our balance. So we add back, right? If bank wrongly increase our balance, so we decrease that one, right? So errors, you are very shrewd in thinking that whether it should be minus or it should be added. But the formula for bank statement is add deposit less outstanding check. I gave you the logic behind that. What is deposit in transit? The customer paid you check, you deposit to the bank, and it takes time to clear the check. So money is in transit. So bank, they don't increase your balance until money is actually transferred. But according to you, you receive the cash, you increase the transfer. So there is a discrepancy over there. Outstanding check, you cut the check, you paid it to your supplier, your employees, but the presenter did not present a check. It means on your books you decrease the balance, but bank didn't receive the check yet, so they didn't decrease your balance, right? It should be decreased, so you decrease it here. On the cash side, cash balance, all the receipts that you allow banks to collect on your behalf, interest revenue, customers paid you, or dividend you received, you allocated the responsibilities of the bank to receive on our behalf. So all the cash that is received by the bank, right, should be added to your cash books. So many students confuse it when they add it to bank balance. It's already added on the bank statement, right? So you please don't do that. Understand the logic, right? It is already on the bank statement. Is bank statement already added our inflows, but on our book side it is not added. So we add it back, right? So we add back here all the inflows. Book error, it can be negative, it can be positive, like we just talked about here. So you need to think logically whether we should increase or decrease. So all the payments that you allow banks to deduct or pay our behalf, or all the service charges, including cost of printing the checks, service charges, interest paid on your account by us, because sometimes our limit is exceeded. For example, we wrote it down checks for $4,000, but in our bank only 3,000. So bank gave the 4,000 and 1,000 as a loan to our accounts and charges some interest. Why? Because we have some kind of a relationship with the bank. If something happened to our balance, please pay the balance and we will be deposit later. Because NSF checks is considered very, very irresponsible behavior on company's side, and it do have a huge penalty or fines if you are a good company, reputable company, and you don't have that much amount in your bank account to satisfy your suppliers. So suppliers can sue you for liquidated damages. right? So delays in payment. So in order to save yourself from this one, so you establish relationship or agreement with the bank that if this much limit is exceeded, for example, if $2,000 we are short on a payment, please pay upon our behalf. We will be paying you this much interest. If $3,000 came, please notify us, and we will be talking about the arrangement. If $10,000 over to our account, if check is coming and it is above the $10,000, then don't do that. Then we accept this is our mistake, and you don't do that. If $2,000 up to, like, they can make that, so they pay to the customer and they consider it as a loan to the company for $2,000, and on those different days they receive some interest. So that interest you don't know. So that is also a cost here. So you also added here service charges, right? And also all the payments that you authorize your bank to conduct on your behalf, like insurance expenses, sometimes rent of the building you allocated to the responsibility of the bank. So the landlord go to the bank, present the agreement, and bank give you the check or give you the money or whatsoever. So that is a relationship with the bank and the landlord. You are just free from this responsibility, right? Okay, here we go. So all those things that are not mentioned in your book side, you must make an entry. So you are not aware that you received the dividend, and you are notified with the bank statement that you received the 900 dividend. What would be the entry if you receive the dividend? You receive the dividend, cash increase, dividend revenue also increase. Dividend revenue, revenue increase, credit, cash increase, debit. What is the entry? Cash to dividend revenue, because this is income. Normally dividend is expense because you pay dividend, but this is you are receiving dividend. When you receive dividend, it is your income, revenue, right? So revenue is a part of owner's equity. Owner's equity increase, credit. So our entry is perfect. Account receivable 2100 we receive, cash increase, account receivable decrease. How about interest revenue? Interest revenue, we receive revenue. It's not interest payment, it's receive revenue. Cash increase, interest revenue also increase. So cash to interest revenue. Debit credit logic is there. Error $360, right? It means we increase our cash. Cash increase to account payable. Wrongly we charge more amount to accounts payable. Now we are doing that entry. So this is according to the error, okay? So it can be different one as well. So just remember according to the error, what's going on. Service charges. Service charges are expense. Expense increase debit, cash decrease credit. So miscellaneous expense or service charges expense to cash, right? Can be service charges expenses to cash. Non-sufficient fund, check. Earlier, when you receive the check, you increase the cash. When you receive the check, entry would be cash to account receivable. But now you make the reverse entry. Check is bounced, we decrease the cash, we increase the account receivable. Right? Reverse entry. When you receive the check, cash increase, account receivable decrease. But cash is bounced, cash is not arrived, so we reverse the entry. Right? Accounts payable, account receivable to cash. Payments, insurance payment. Insurance is our expense. Insurance expense to cash, simple, because cash involved. Right? Then you make the entry. Do we have to make entry on the bank side? No. It's with the bank. We are not responsible to maintain bank's books. We are responsible to maintain company's books. So we are responsible to make an entry adjustment on cash balance per book, not the cash balance per bank statement, right? So here we go. So a summary of reconciliation is, on the bank side, always do that. Add deposit in transit, subtract outstanding, add or subtract if there is a banking error. On the book side, always do that. Add all kind of receipts that you gave authority to the bank to collect on your behalf. So any kind of dividends, interest, receipts, subtract any kind of payments or expenses, service charges, NSF, EFT payments, and add or subtract the human error. Simple, right? So we have this illustration, and we would do that in our next lecture as a breakout room activity. But before the start of the next lecture, please try to understand and do this illustration that we did here, this illustration, the book illustration that we just did here. So the illustration of the book illustration that we would do, a new question I would be doing as a breakout room activity, and it certainly would have some marks. Before the start of next lecture, please completely understand this example, right? Any question regarding our bank reconciliation?
No questions.
Okay, so we are going to end our discussion here. Summary of the reconciliation statement. So also try to, I think you don't need to memorize all the stuff. It's fairly logical. Plus, just remember the formula that on the bank side, we add deposits, subtract the outstanding checks. On the book side, or book balance side, we add all the receipts, subtract all the payments and charges. That's it, right? And at the end, the bank balance must be equal to book balance, must be equal to book balance. If not, it may be due to human error, maybe due to bank error, or last option is it's a fraud. Then you go out the missing link and you find out where is the error, or that is made intentionally to harm someone. It's fraud, right? So that's all. See you in our next lecture. And remember that after the completion of this chapter, we would be having our midterm exam. Okay, any question?
No question.
No question.
No, thank you.
Take care of yourself.
You too, sir. See you next week.
Bye.
Bye, sir.
Bye-bye.
Bye.